Another day, more record highs. That really seems to be the case. What do your studies around market breadth, the internals, tell you?
Yeah, so we know that the medium and long-term trends are great, and market internals continue to be very robust. So one of the things we look at is the percentage of S&P 500 stocks that hit a 52-week high on any given day. And normally we want to see that number, pretty high. That shows strong breadth. But sometimes you get to such an extreme reading that it's almost too good.
Is that where we are?
So that's what happened last Friday. So if you look here, this is the percent of S&P 500 stocks at a 52-week high. We had 33% on Friday. That's the highest reading since May of 2013. And what's even more remarkable, we've only seen 10 days since 1990 that have seen at least 30% or more stocks hitting 52-week highs. And you would think that'd be a good thing, as I said. But what we find is that 2 weeks later, the S&P is actually down 9 of those 10 instances, averaging about 1.87% decline. So it kind of tells you that you've been in a strong uptrend, and it's kind of that last gas exhaustion move, and then that sets up for a little bit of a retracement.
So let's put that together with the 200-day moving average, because the S&P 500 is well above its 200-day moving average. Does that support your first chart? Yeah,
so again, here's the S&P with its spread to the 200-day moving average. It's about 12% above right now. That, again, is the highest reading since that May 2013 period. And so there's a lot of analogies to that. Now, 2013 was a very strong market year, finished the year very well. But what you can see is when you hit this extreme exhaustion point in May, you saw a little bit of a retracement. And we think that's potentially the setup you could have here now. Again, nothing too bad, but just a little bit of a consolidation here.
Very interesting. Well, you know what is also interesting? Bitcoin, even though it's been pretty wild, it hasn't had too much of an influence on stocks. But I would love to show this chart. It's G#BTV7824. It's a weekly chart. We do see an uptrend, and we see on the recent drop a down to that uptrend. And when I look at this, I'm wondering, do you think that support holds, or do you think that area of congestion that has broken to the downside fulfills for a measured move all the way down toward, say, 1,000?
Yeah, it's amazing. If you're just watching some of the intraday charts, the move the last week or so feels pretty dramatic. But you look on this chart on a log scale, and you can see it's really just a pullback to its uptrend. We're actually the most oversold we've been since the last test of the uptrend. So I think the benefit of the doubt still goes to the buyers here. That's down about 50% off the highs, and that's about the area of the previous correction. So I think it could provide a good entry point here.
When do you think it would go to the sellers if it were to drop back down lower?
Well, I think it's the difference that would make this different than any other periods is that you don't see that quick snapback.
Gotcha.
Every other time we pulled back, immediately V-shapes new highs. If we kind of chop around without making much progress to the upside, that would be a change of character for Bitcoin.
So the Bitcoin buyers have it right now.